All right, let's get you a special interview now. Indians may be investing their wealth in mutual funds, but that hasn't stopped Mercedes-Benz from becoming India's largest luxury car maker. The German luxury car company remained the market leader in India for the 8th consecutive year with a market share of 50.6% in 2022. It has the largest retail network for a luxury brand and also the largest portfolio of made-in-India luxury cars. Mercedes-Benz sold 15,800 cars in India in 2022, rising 41%, the highest ever for the brand. I caught up with Santosh Iyer, the MD and CEO of Mercedes-Benz, on the year that was for the company and the road ahead for 2023. I began by asking him about 2022 and what are the growth drivers for the company moving ahead. Listen in.
2022 was a very special year. It was a year of transformation because we changed our business model. We now sell directly to customers via our franchisee partners. We localized an EV in India, which is the EQS, the first luxury brand to do so, plus many other initiatives. And the result of all of that is we have grown by 41%. 2022 has been the best ever year for us, selling more than 15,800 plus cars. More importantly, we have very high customer satisfaction ratings because that's also important for the future. And all these results come at a back of a pending order bank of more than 6,000 cars. So we clearly term 2022 as the best ever year in our 28-year history in India as such.
Right. To talk about the prospects going forward, what do you think will drive growth for the company this year? You've said that you've seen the greatest growth in the top-end segment, but overall, what are going to be some of the tailwinds for you, some of the growth drivers?
Well, I think firstly, let me talk about the tailwinds. You know, we have right now we start a year with a strong order bank position. We have on an average every car line waiting for 4 months to 9 months. So our first priority is to reduce this waiting period because you know customers have occasions, they have weddings and families, and we are not able to deliver on time. So we need to reduce this. So we are working with our production colleagues to reduce this. On the demand side, we also see 2-3 big demographic changes. You know, we have more women buyers buying Mercedes-Benz cars. Our average age for an S-Class has come down to 38 years, for a C-Class is 35. We see salaried class now increasingly buying Mercedes-Benz cars because that used to be hardly 7%, now it's around 14 to 15%, which also means corporate India results are great, maybe the employees are buying cars or they're able to afford Mercedes-Benz cars, which is great. So these are all the positive drivers. On the negative side, you know, we just increased our prices 3 to 5% now, 1st of Jan. The exchange rate, the euro to rupee doesn't look great at this stage. Last 6 weeks has been bad for the rupee. That gives us some shivers that we have to again take next level of price increases. Would that dampen the sentiments? Would that dampen demand? We need to wait and watch. So these, and of course the entire logistic concern has not gone away. You know, the supply chain issues because of geopolitical issues in the Europe, or you know, the energy crisis, and also this COVID lockdowns, which also means that the supply will be affected even for 23 to some extent. So these are some topics which keeps us awake. We need to work on this. But overall, when you look at the demographics, when you look at the overall macroeconomic development, you know, the tax collection is high, stock market is doing well. We still feel that a double-digit growth for Mercedes-Benz for 23.
You had recently said that for Mercedes-Benz, the biggest enemy, the biggest hurdle to growth is SIPs. There was a big debate over it. A lot of people felt that that really cannot be the case. So why did you feel so? And do you feel that that argument is still very relevant in 2023?
See, first of all, SIP is an acronym for savings, you know, and I think the mutual fund industry has done a great job in really equating savings with an SIP, and we see the results, you know, the amount of money which comes every month into the markets with small savings, and that's a great, you know, indicator of saving potential. Now, the comment was made in a context, what will it take for the luxury market to grow in the next 3 years' time? And it was not particularly to Mercedes-Benz. But let me come to and clarify this. Today we have 41% growth coming from this YOLO mindset. You know, we have a lot of customers who feel let's enjoy life, let's buy luxury cars or even watches or even any other luxury consumption. And then there is another segment that we come across where they have the wealth, They have the money, but they don't spend yet. And these guys, they continue on savings. And as I said, SIP was more of an acronym for the savings, that let me continue to save, maybe of an uncertain future, maybe of the uncertainties around, maybe for cultural reasons, because I still don't want to splurge. And we can see many wealthy individuals, HNIs, ultra HNIs, because when you look at the ratio of India's ultra HNIs and HNIs to car sales, it's quite less compared to many other parts of the world. And the only explanation is that they try to drive more savings as such. The comment was made that for an economy to grow and for also the markets to grow, consumption and saving both need to go hand in hand. Only when people start buying produce, the stock market also grows because of it's directly correlational to each other, and that was the context. Having said that, what we feel is there is a demographic shift happening, which I mentioned earlier. There is consumption patterns which are changing. This cultural pattern of shifting, and trying to spend on oneself, spend on today and not just on tomorrow, I think would take that time. But there is no indication that people have to stop savings and start buying luxury cars or luxury products and stuff. It is about people who can already afford because they have already a huge wealth with them in terms of savings done in their, you can say, career or in their lifespan. And why don't they upgrade to now luxury products? I can give another analogy. You see in airports in India, you don't see any luxury outlets. You don't see some of the luxury brands in airports and what you see in Europe. That again is an indicator of low consumption. Not that people don't buy watches or handbags and stuff, but it's just that the consumption for luxury goods is still to take off much more significantly. And this will happen with economic factors and socio-cultural factors in the next 3 to 5 years' time. So it's nothing to do with immediate prospects.
All right. So you also feel that the consumption pattern where you see people focusing more on savings, spending less on the luxury segments, luxury cars and luxury goods, that still exists, that persists.
A segment of people, as I said, this year, if you see, we grew by 41%. This growth would not have been possible if the people were not spending on luxury cars. We have 6,000 customers waiting to get a Mercedes-Benz. Yeah. So there is a segment of people who are splurging. Then there is another segment of people who are not. Maybe if they are doing, they may buy an E-class instead of an S-class, or maybe a C-class or an A-class instead of a C-class, because they feel fine. I am fine with this car. Maybe I don't need the top-end vehicle and stuff. So that's also a segment which exists. So it's not that in general we can categorize that the entire market is only on the saving mindset. Because if that was the case,
so what would be the segment, the age group, the category of people who are holding back, according to you?
This is
the SIP category.
It's the 45 to 60 more, which is actually holding back.
45 to
60, which is holding back. They have the wherewithal to buy. They have the bank balances or the so-called balances to buy the cars, but they hold back and they wait. Also, cars in India or, luxury consumption is conspicuous generally. And this is something that is clearly visible. So that's why I said it's a bit of cultural topic, and not that one has to consume. It's also not that we are suggesting that consumption is the way to go in. But we just feel that there is a higher ratio, and that explains the ratio of millionaires to luxury cars sold in India. This ratio, India is one of the lowest when you compare to any other markets in the West or any other market in the world.
Oh, okay. Now coming back to the prospects of greater localization in India, making in India for the world, what is holding back Mercedes-Benz? Do you think FTAs, if the India-EU FTA goes through, could that change things about the way Mercedes looks at India?
See, first of all, FTAs are good because it drives economy holistically. There is trade both ways. Borders are opened up, and that really helps. So we will definitely always support any FTA in that perspective. Now coming to manufacturing, because what will happen if FTA comes up? Now manufacturing is, as far as we are concerned, we generally make cars closer to the market. So we have plants in Europe, we have plants in US, we have plants in China, and most of these plants. And this is because we get efficiencies due to the logistic cost. See, these are big cars, and to transport them from one continent to the other, whatever savings we tend to do in a certain market will all get eroded in some of them. Secondly, the logistic environment itself within the country, outside, also will have to change. So I think the current initiatives are great in terms of improving overall road infrastructure, ports and highways, so that's set up. With FTA coming in, we will reevaluate for sure on what we can do for the local market, because that also opens up free market access for many of our car lines. For example, this is a CBU. This can also come easily to India. And then what can we then send it back, maybe to Europe or to other country. But it's all about ifs and buts, and it depends on when it will happen and the fine print. Yes. Okay. Because FTAs also doesn't mean zero duty. Yeah. Maybe there is also certain tariff.
But what kind of tariff reduction would you be seeking?
See, today CKD kits, the what we produce, has a 15% import duty. So it's only for the CBUs where the import structure is significantly higher, 110%. So for doing a CKD business, it's the 15% that we do and the duty that we pay, and that 15% will go away when it comes to I would say duty rationalization or FTA, and that's the cost advantage which one can pass on to the market.
Okay. I'd also like to ask you about any policy measures where you're engaging with the government on currently, especially on import duties or any other ease of doing business measures.
I think we are discussing on 2-3 counts. One is we want policy consistency. You know, one of the major drivers for India would be the GST benefit on EVs. This not only helps us, but also all Indian manufacturers for faster adoption of EVs. We just hope and we feel that this should be continued at least for next 5 to 10 years, so that we are able to transform the market from combustion engines to EV, which is not only sustainable, but also helps for our import bills and many other topics. The second topic, so apart from the policy consistency, is the regulatory environment. So India actually has one of the most stringent regulatory environments when it comes to now, EVs or certification or CAFE norms, which doesn't affect us personally because all our cars are fully compliant. Even with the current CAFE 2 norms which comes in, we have already mentioned that we will continue on diesels in India. And we are fully compliant on that. And the last is also from a legislation perspective, faster, judicial reforms, if we can expedite many of the judicial processes. But that's more of a higher order wish list. But for ease of doing business, I think we have been in India for 28 years now. Last year was the best ever year for us. And it's also for us to learn to do business in markets based on what the market conditions are.
Right. My final question. What kind of growth do you see in EVs in this year?
See, I can give you from our experience.
And your overall sales growth that you expect?
Yeah, so from our experience, when we launched the EQC 2 years back, in fact 2019, start of 2019, we said it's an experiment, let's see what happens. And our bookings were much higher than what even we planned for next 2 years. So then we changed our portfolio, but then by that time COVID happened and all the issues. This time around, we decided to localize one car and one car in CBU. Both the cars have a waiting period of 4 to 6 months. Again, proving us that we undercalled the market than the potential. So we feel customers are ready. We need to work on the charging ecosystem. And that's the reason we set up the fast charging ecosystem. We have now the largest luxury EV charging network in India. Because that's one anxiety still. Everybody says, can I go intercity? Though they don't do intercity every day. But for that day when I travel, say Delhi, Jaipur or Bombay, Goa, I need charging. So as long as we are able to take care of that, I think the market is there. As I think I said this earlier, that next 3 years we see 25% of our sales will be EVs in India also. But for all of this to happen, also for the overall market to grow, I think it's up to the manufacturers to introduce more products at the right pricing. We have seen that with mass market. We have great examples in mass market where EVs, if the portfolio is there, it sells, and there is a huge waiting period.
So what is the current percentage? How much could it go up to?
So currently, see, we started deliveries only in November, December. So it's too early to call a percentile because it's 2 months of sale compared to the year. But I think we will be in the region of 2 to 5% as we start now this year. And in 3 years, it should go to 25%.
Overall growth, what kind of growth do you expect this year?
Double-digit growth, as I said, because from a tailwind, as I said, demographics and the order bank, but the headwind is the price increases which may come, and we don't know whether that will dampen up demand. So we are cautiously optimistic with a clear double-digit growth projection.
All right.
Okay, we have the first advance estimate.